And now we have key reversals bearish. Again, this is a type of reversal action. They're very similar to hidden up thrusts. Although they have up thrust characteristics, they occur in a weak rally rather than at resistance. If you remember, an up thrust, we need to up thrust horizontally. Here, we have a weak rally coming up. And then we can have a bar like this, and this is our key reversal bar. Pops its head above the previous bar to reverse and close weak, preferably below the previous bar and or a wide spread. So this is textbook. A lovely key reversal bearish bar. However, we can get a weak rally like this. And then we might push up, come down and close like this. Yes, technically it doesn't close under the previous bar, but we can see that this is a price rejection of the highs because we're slowly grinding up here and then boom, bulls push it up, drive the market higher, you know, not good wide spread, but then sellers slam it down. Yes, it doesn't close under, but still we'd recognize this as negativity. Okay, although not technically a textbook key reversal bearish bar, we'd still recognize this bar as weak. Okay, and of course, as a bearish setup, they're more favorable in a downtrend as they have a higher odds of success. Okay, let's go on to an example. Here we have key reversals on the Nasdaq futures using a 5. Now this is a simple chart in bearish key reversals. There's no volume, so we can focus directly on the price action. But we notice that reversal. We get a weak rally and then boom, prints. It went above the previous price action, above the local bars, before reversing, closing weak. However, here the spread is very large. And we also break the last swing low here. So this equates to a very negative tone. This is extremely bearish behavior. Well, just bear in mind that this is not an up thrust. Why? Because on up thrust we need to take out the highs. Here we just take out the local highs with an attempt to rally. It's diagonal. It's not horizontal. Okay, that's important information. So one could say that this is a hidden up thrust. Well, perhaps if we draw it from here. However, as we know, the label is unimportant. The fact remains that the result is bearish. Okay, this is negative behavior. Pops its head above here, reverses to close weak under all this price action after an attempt to rally. This is I would call it a key reversal. Although some could argue it is a hidden up thrust. Each to their own. This is negative. It's weak behavior. And then we come on down. Boom. This bar here, we're in a confirmed downtrend. And with the data we have available on our chart, we're making lower highs and lower lows. So as we can see, we've got highs, lows, lows. So, you know, we are in a confirmed downtrend. So the market halts on this bar, has an attempt to rally. Here, what do we notice on this? Instant shortening of the thrust. The spread has halved. The close is off the highs. Okay, it's struggling. Demand is tiring. Then boom, bar B, sorry. Buyers drive it higher into this supply, into this area of resistance here, and boom, it's slammed down, closing right on the lows, very weak. Yes, it doesn't close under the bar. Like I said in the beginning, you know, in the opening, we can get a rally like this. It doesn't have to close under the previous bar, but we can see that bar B here is weak. It's got widespread increase. We can't break this level, and although we don't close under, I'd still class this as a key reversal bar. This bar hints towards downside continuation. Okay. Now there is more to this chart. Here we have C. Now the question is C an upthrust? Is it a hidden upthrust? It's hard to tell, but we can see the weakness. Sellers are capping the highs. Okay, we can see the selling. Look, push up, slam down, push up, slam down, push up, slam down. There is weakness here. And say at C, first of all, would this level be drawn? Yes, we would draw it. Why? Because at some point, this bar here be down here. So there is a reaction from here. So we'd draw this level in. Okay, perhaps you may not have drawn it in, but when after C prints as it drives up here and closes under, this level must be drawn, a local level of resistance. And then this second bar here pops its head up, comes down, closes weak. What do we have on this second bar here? We have a lower high, a lower low, and a lower close. We can see the weakness. Okay, we cannot close over this local level of resistance. So this bar 2 here, we can take a trade very comfortably. And then the fact is the market is very kind and gives us this bar. Again, we make a lower low and a slight lower close with a little price rejection. Again, sellers are capping this area. The market is very kind and we must be shorting at least, if not the second bar, we must short the third bar comfortably. Okay. One can make an argument that we're holding here, because, we have a clustering of closes. However, we must remember context. Selling at the highs, selling at the highs, selling at the highs. Where are we? We're in an area of supply, and this is resistance. This is resistance. Okay, so the market is struggling here with evidence of selling in an area of supply. So when we piece the story together, we can trade these two bars very comfortably. Okay, and of course we are shorting in a downtrend when we're making lower highs and lower lows. Alternatively, if you don't want to trade these two bars and we see this bar here, after these 3 attempts where we can see the sellers capping and we push up and we drive down, perhaps you might want to see a break either under this low again, under these closes, or under this low, and you can let the market pull you in. However, when you let the market pull you in, your stop still has to be here, okay, or above these highs here. So you're paying for that extra confirmation, okay, because we'd be selling these on the close. So always bear in mind that we must pay for confirmation. So an important aspect really here is, again, do not label. Okay, I know I keep on repeating myself on this topic as I hope to convey that this method is discretionary. Many people or traders, they try to make trading as mechanical as possible. Why? Because it alleviates thinking, the thought process. Okay, it's much easier to have a rules-based system. However, here we can see weakness. So this is a key reversal, perhaps an upthrust. This is a key reversal, okay, and this is just weakness, or that could be an upthrust, but we can see the selling, the capping at the highs. Excellent. On to the next study.